Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the derivative data of Nifty, Bank Nifty, as well as the different asset classes. Now, first of all, just a general disclaimer. This video is only for educational purpose. Consult your financial advisor before investing in trading. So first of all, let us go back to our last video and let us discuss what we have mentioned, what we have discussed in our last video. In our last video, we have mentioned that last week uh, we were expecting some sort of weakness, but market might remain in a broad range. It would be a very difficult market to trade for the traders because of the monthly expiry, and it was a truncated week, but market didn't perform on our expected line. We were expecting a broad range, just like a zigzag movement, but we saw a sharp deep dive in the markets because of the global uncertainties, global geopolitics going on. Everybody is knowing, and not only the Indian market as well as the global markets were under selling pressure and huge selling pressure. FIs have also sold significantly in the last couple of trading sessions. But the only relief thing which we have seen on the Friday was a gap up opening after the monthly expiry. On Friday, we have seen market with a gap up opening, and it ended on a positive note, traded positively throughout the day, consolidated after gap up opening. That is just a first sign of relief that maybe in coming days this selling might the intensity of the selling might slow down. We might see the process of bottoming out of the market might start in some days, and we might see afterwards we might see a start of a rally. And also we have seen that the prices have already been hammered down significantly. Some sort of oversold setup is also seen on the charts. So from before discussing, let us directly go to the Nifty daily charts. We'll try to figure out why this intensity might get slowed down of the selling pressure, and why we might see a bounce back rally or turnaround or a bottoming out process. So let us go to the Nifty daily charts and we'll try to analyze what could be the trend for the next week. Now this is the Nifty daily charts. You can clearly see now this is the Nifty daily charts. Now here you can see a horizontal blue line. Maybe in October, November last year, the high was almost 18,800. That was a multiple resistance area. That was again re-challenged in the maybe June, July of June, July month of this year. So now exactly after 5 to 6 months, again those levels are being tested. That is 18,800. Earlier it was resistance. Now it has become a strong support. You can clearly see RSI has also entered into oversold territory. Still, RSI is weak. It has not given a positive crossover on the daily charts, but definitely on the hourly charts, the RSI has given a positive crossover. But the most important thing which I would like to emphasize or put more importance is that 18,800 was an important resistance of the multi-year breakout earlier, and now it has become a strong support zone. So maybe market might consolidate at these levels, might start making bottoming process where it's 18,800 to 18,700 could be the support zone. And if these support region are held or what we call defended by the bulls, then we might see a trend reversal coming in maybe in couple of trading days. And even the selling has the intensity of the selling is getting slowly and gradually narrowed down at these levels. I'm not saying that this is the bottom, but we might see the process of making bottom being started on Friday. But that doesn't mean a pullback on intraday basis cannot come. It might come, but that should be used as a buying opportunity. So now, friends, now let us discuss the important supports and resistance level in Nifty for the next week. So first support in the Nifty is placed at 18,926. Below that, the second support is placed at 18,837, and third support is placed at 18,646. So on the upside, the first resistance is placed at 19,122. If it closes above those levels, then next resistance is at 19,257, and above that, the third resistance is around 19,333. So these are the important supports and resistance level in Nifty for the next week. Traders should try to just watch out these levels and just uh, try to follow these levels. And one more important thing which I would like to is, let us go and just have a view of India VIX. Last week, India VIX has rallied almost more than 15 to 16%. Just I would like to share the charts of India VIX so that we might have some sort of a clear view. So what could VIX? Now this is the India VIX. You can clearly see it is trading in a very broad range. Let me stretch the chart so we will have a clear view. Since last couple of months, so maybe almost to be precise, since May 2023, India VIX has been trading in a broad range of 13.10 on the upside, and on the downside almost 9, or maybe almost 8.80. So currently, last week it has tested the upper band, and now you can see multiple times when Nifty has tested the upper band, it has the VIX has corrected and markets have rallied. So you can clearly see on Friday the VIX has corrected significantly. I'm not saying that again from next Monday onward it will start dropping. Maybe we might see a pullback in India VIX, and then it might start again drifting towards the level of 9 in the next couple of maybe weeks, maybe next 4 to 6 weeks. So definitely this is again a indication that market might be in the process of making, or already have started in the making a bottom at this juncture. So now, friends, just this was just a view which I would like, which I was uh, put wanted to put to your notice. So VIX is a clear indication that market might start making a process of making a bottom. So one should be cautious. Do not go short aggressively at these levels. Try to avoid going short. Yes, you can trade, or you can adopt a strategy of buy dips from these levels. So now, friends, let us discuss the derivative data of Nifty calls. You will see on the screen. In Nifty calls, the action was seen in 19,100 calls, 19,200, 19,300, and 19,400 calls. Now you can see the option premium is positive. There has been a rise in the volumes. Open interest is also rising to particular strike prices. Implied volatility is in comfort zone between 10.37 to 10.70. On immediate basis, looking at the open interest and volumes, we feel that 19,200 could act as an immediate resistance. Once that is taken out decisively, then Nifty might rally towards the level of 19,400 to 19,500, maybe in next 10 to 12 or 15 trading sessions. So on immediate basis, 19,200 could act as an immediate resistance. And looking at the charts and this particular data, we feel that, or I feel that this would be breached maybe in coming trading sessions, or at least in the next week. Now let us discuss the important data of Nifty puts. You will see on the screen, in Nifty puts, the action was seen in 19,000 puts, 18,900 puts, 18,800, and 18,700 puts. Now here you can see there is a rise in the open interest. Volumes are also on the high. Implied volatility is slightly going higher. It is between 10.76 and 12.72. The most important thing is the significant drop in the option premium, which is clearly indicating that the smart money has already started writing the out of the money puts or at the money puts also up to certain levels, which means the undertone of the market is bullish, and we might see the extension of rally from these levels. Now, on the immediate basis, 19,000 could act as a strong support. Looking at the concentration of open interest and volumes, if that is breached, then Nifty might drift down to the levels of 18,900, but that would act as an immediate support at the lower levels. And if there is a cool off next week between 18,900 to 18,850, that should be used as a buying opportunity at the lower levels, or the trader should try to go long at those levels. So friends, now let us discuss the daily charts of Bank Nifty. You will see on the screen. Again, Bank Nifty has also a similar kind of pattern on the daily charts. Resistance again becoming support at these levels. You can clearly see this particular resistance trend line, which was marked in maybe almost from January 2023 to April 2023. Now that level, which is 41,200, is exactly making the support area, or it has made a support area at these levels. You will see on the screen. So definitely, again, it has broken, the trend line, which was a long-term trend line. But again, it has taken, Bank Nifty has taken a support around the multiple resistance area. You can see the blue horizontal trend line where Bank Nifty has taken a support, and after that, it has taken a sharp, or it has witnessed a sharp bounce back. RSI has also given a positive crossover from the oversold territory. So this is clearly the signs of or a start of making a bottoming process at this juncture. So at least the charts are showing the oversold setup. Any dips should be used as a buying opportunity. Looking at this particular blue horizontal trend line, again the setup is also oversold. So definitely we might see markets making bottoming out process maybe in next coming trading sessions. So looking at this particular setup, we feel that the buy on dip should be the strategy. Yes, volatility cannot be ruled out, so it would be difficult for traders to trade, but one should trade with strict stop losses, or one should hedge the long position. Say for example, if anybody is buying futures in Nifty or Bank Nifty, should again take a cover or take a hedge on the downside with buying a puts, which will give a downside cover to the downside risk. But if market rallies, even there is nothing to worry, even if that particular put goes to zero, but markets might give positive returns on net to net basis on future if anybody is trading in futures in Nifty and Bank Nifty. So friends, now let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed around 42,482 is the first support. Below that, the second support in the Bank Nifty is placed at 42,105, and below that, the third support is placed at 41,666. On the upside, the first resistance is placed at 43,029. Above that, the second resistance is placed at 43,555, and third resistance is placed at 43,877. These are the spot levels of supports and resistance level in Bank Nifty. Even in Nifty, the supports and resistance levels are of spot levels. Traders should just try to watch out these levels and wait for the market to make some base, wait for some pullback, and then try to create or build long positions at the lower levels. And yes, we might see volatility coming in at least for the next week, but any dips should be used as a buying opportunity looking at the particular charts. So friends, now let us discuss the derivative data of Bank Nifty calls. You will see on the screen the derivative data of Bank Nifty calls. In Bank Nifty calls, the action was seen in 43,000 calls, then 43,500 calls, and 44,000 calls. Now here you can see rise in the open interest, rise in the volumes, rise in the option premium. Implied volatility is between 12.98 and 313.04. So smart money might have slightly started buying Bank Nifty out of the money calls. But definitely at this juncture, looking at the open interest and volume, we feel the 43,000 could act as a immediate resistance. If it breaks, then we might see the extension of this short covering rally towards the level of 43,500 to 43,800, or maybe 44,000 in next week. So definitely looking at this particular data, we feel that the data is positive. for the markets, but we might see some sort of cool off that should be used as a buying opportunity. Now let us discuss the Bank Nifty put data. In Bank Nifty puts, the action was seen in 42,500 puts, then 42,000 puts, and 41,500 puts. Now here you can see um, uh, there is a rise in the open interest, rise in the volumes, but there is a significant drop in the option premium. Significant drop in the option premium. Implied volatility is little bit high. It is between 10.17 to 16.76. It is already in the danger zone, but you can see a significant drop, which means the smart money has already started writing out of the money put, which is clearly giving a clear indication that Bank Nifty might see a sharp short covering rally in the next week. So maybe any pullback in Bank Nifty should be used as a buying opportunity. So now on immediate basis, maybe 42,600 to 42,500 could act as an immediate support. If it closes below that 42,500 mark, then only there are chances that Bank Nifty might drift down to the levels of 42,000 mark. But definitely, if there is any dips in the Bank Nifty, maybe 150, 200, or 225 points of correction of cool off in the Bank Nifty, we might see buying support coming in at the lower levels strongly because of the significant drop in the option premiums. So definitely, the data is bullish. The charts are bullish of Nifty and Bank Nifty. Any dips should be used as a buying opportunity. This should be the strategy for the next week. Yes, one should buy. Uh, those who are conservative traders should buy puts if they are trading in Nifty or Bank Nifty futures. That buying puts will give a downside hedge if any negative event happens globally, which is unpredictable at this juncture. So just try to protect the downside by buying puts in Nifty and Bank Nifty, and you can go long in Nifty and Bank Nifty puts. In futures on dips from these particular levels. So, friends, now let us come to the final segment of our show, which is positional call. I've identified one stock from NBFC. The name of the NBFC sector, the name of the stock is M&M Financial. Let us go to the daily charts. This is the chart of M&M Financial. You can see stock has formed a triangle formation. Though the stock has not given a breakout, but definitely the setup is looking positive at this juncture. This is Kotak Bank. Let me. Mahindra and Mahindra Financial has formed a triangular formation, or you can call a downward falling wedge. RSI has given a positive crossover. You can clearly see on the daily charts. Let me stretch this RSI. You can clearly see RSI has also given a positive crossover. The stock has formed an engulfing bullish pattern at this juncture. Still, the breakout has not happened, but definitely looking at this particular setup, we feel that maybe in next couple of trading sessions, we might see M&M Financial witnessing a triangular breakout from this particular pattern formation. So the stock can give a decent return from these levels. So maybe investors, swing traders, positional traders can buy the stock on dips to 272 for an upside target of 307 in short to medium term. Short to medium term means maybe next 2 to 3 months or 4 months time horizon. So definitely one can accumulate or buy the stock on dips to 272 for the target of 307 in short to medium term. So friends, thank you very much for watching the show. Let us conclude the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.